Hi, it's Carlos Heredia from YourGreatBusiness.com, where we help educate and empower entrepreneurs like you to start, fund, and grow great companies. Today, we're going to talk about some key questions that you should ask yourself to determine if you and your company are ready for angel investors. As you probably know, angel investment has become an increasingly important source of funding for startups and growing companies. However, as you consider seeking funding from angel investors, it is important to know what you're getting into and what to expect. The concept that you need to understand is equity dilution. Whenever you sell stock of your company to other people, you will end up owning less of your company. So if you're the only stockholder right now, you own 100% of the company, but if you sell shares to other people, you're going to own less than 100% of the ownership pie of the company. Be careful. Angel investors probably are more experienced in these types of financing deals, and they understand valuation and ownership and how that equity split might play out. You will need to focus on trying to get as high a valuation for your company as possible so you give up less ownership. And if you don't do that right, there can be bad feelings and resentment that you own too small a slice of the pie. It may not be good for the future of your company. So it's also important to remember that you should not look at just this one financing transaction with the angel investors in isolation. There will be equity dilution. You'll own less of your company. But if you think about the next financing after this one and the one after that, you need to try and think about what the ultimate dilution or what your ultimate ownership position will be in the company after you do these successive deals. It's important to remember that the angel investment deals are like many venture capital financings with all of the same control bells and whistles that you'll find in a venture capital deal. So after the investment is done, the angel investors may have representatives on the board. They may have veto rights or the ability to approve all major decisions of the company, and that may not sit well with you. So you need to look inside and remember why you started your company. And if the main reason was to chart your own course and control your destiny and be the boss, you need to really think about whether this angel investment is going to work well with your objectives of having founded the company originally. It's important to remember that angel investors are investors, and they're investing money in your company because they want to see a return on their investment, and they want to make money. And the most likely way for them to get that return and make that money is through the sale of your company, and the sale of the company at profit, where they see some gain, some positive return once their stock is sold as part of the sale of your company. So you need to, again, do another gut check to see if your mid to long-term goal for your company is consistent or in alignment with the goals of the investors, who more likely than not will want to sell the company, and sometimes in as short a window as 3 to 5 years. When you take on angel investors, they're going to have questions. They're going to want to receive updates and expect updates, and they probably will have contractual rights to periodic company information. So you could end up, depending on the size of your financing, end up having a lot of stockholders from the angel investment. So just think, if you're raising $1 million and the average investment size is $25,000, you could end up having 40 stockholders. That's a lot of stockholders to take care of, and many of them will be positive and supportive and give constructive input. But certainly at least a few in the angel investor crowd will be difficult and demanding, and probably use up a disproportionate amount of your time with their questions and demands and the like. So before you go down the path of seeking angel investment, you need to ask yourself, are you ready to take on this additional burden of investor relations? Now it's your turn. Help out your fellow entrepreneurs and let us know. We would love to hear from you. Thank you for your time, and keep building your great business.